If you're a brand new real estate agent, you got plenty to worry about. You got plenty of exciting things coming. How to learn how to read brokerage statements, how to get your marketing done, how are you gonna make yourself visible in the space where there's already plenty of saturation, getting your name out there, important stuff. But the tax and financial side, something you don't wanna overlook. If you get these elements set up early, some of these key elements we're gonna talk about here, you're gonna be on your way to success. You're gonna save yourself a lot of strife down the line. In this video, we're talking about 3 things you can do to set yourself up for success from a tax and financial standpoint. Number 1, what do we got here? We got ourselves a Venn diagram. What are we talking about? Separate your personal and business bank accounts. Your personal and your business bank accounts. You do not want the same money running through one account. Once you're doing a realtor, once you are a realtor, you're essentially running your own business. You are getting 1099 income, so you have plenty of stuff to keep track of. The easiest way to do that is to make sure all of your business income, all your business expenses are running through one account. Why is this Venn diagram set up? Because I just want to illustrate that we should have nothing falling in the middle here. We want either personal expenses flowing into one account and your business expenses flowing into the other. Nothing in here ever creeps in there, and same over here. We're not getting into this middle. There is no middle for our all intents and purposes here. We want to keep them separate. It's going to be the single most important thing, single most beneficial thing from a financial standpoint, because it will be the thing that allows everything else to work down the line. Number 2, we've got ourselves a happy face and a sad face. What could they be for? Simply having a tax system. That's number 2. Have a system where you're setting aside money for taxes. You can get really, really complicated with this, but as you're just starting, you simply just want to understand that you need to be setting it aside. What does this come from? You're not a W-2 employee. You are a 1099 employee, meaning you're going to receive all your income. You're going to get a 1099 at the end of the year, and you're not going to have any taxes withheld. So what that means is you are responsible for paying both income taxes and self-employment taxes. And what we want is a system simply to estimate the amount of taxes you're going to owe at the end of the year. Now, taxes are very complicated. Taxes suck. It's right there on the board. But you can use history. You can use people who have used similar systems to come up with an idea of what you should be setting aside at first. So let's just even call it 30%. If you have $50,000 of income coming in, what you're going to do is set aside $15,000 for taxes. Does that suck? Yes, but you're just simply putting it into another account or allotting for it in a current account and in your current business account and making sure you're not touching that money until tax time comes. When you do that, you're simply going to be in a preparation, almost a proactive state of paying for your taxes when you have to do that come April. That is what our happy face and sad face ultimately is for. So I took up that real estate here with our little bubble. We're going to erase that. People that are happy in this industry as they start, that's what's going to get it done for us. The people who set it aside are going to be the happy ones. They're going to end up having that money there. They're not going to get hit with a giant tax bill that they don't have any money to pay at the time, because you don't get to avoid it. It will only carry into the future and compound, so you want to make sure you're on top of this from day one and not getting behind on your taxes. Setting aside taxes is what's going to allow you to do that. People who do not set aside, they're going to get that frowny face. They're going to be so sad when they go around asking family members or a tax pro how much they owe, and ultimately find out it's thousands of dollars and all they have are pennies in their bank account because they spend it on other things. Make sure you have money set aside to pay for your taxes at the end of the year. And number 3, what's the third thing you can do that gets you in front of the game from a financial standpoint? Track your monthly net income. Monthly is important because the only way to track your performance over the course of the year is having understanding of where your income and expenses are flowing in throughout the year. And you can only do that through tracking things monthly. Now, does this have to be perfect right away? Absolutely not. You can build it piece by piece over time. You're going to get your brokerage statements. You're easily going to be able to see your gross income, right? That's what's going to show up on that 1099 at the end of the year. You're going to be able to see your income flows. What you need to be able to do is understand where your expenses are coming in, what they're composed of, and where they're ultimately hitting, so you can track this on a month-by-month basis. That's going to set you up from the beginning to understand your ebbs and flows, how your money ultimately is factoring into how much taxes you owe, how your income is factoring into that, and giving you the ability to make adjustments throughout the year. A lot of times there's not always going to be adjustments, but this is the framework by which you're going to have the opportunity to make adjustments and ultimately improve your financial situation as time goes by. Now, a lot of this stuff is not rocket science. It's simply putting things in the right spot, setting up simple systems so that your money is flowing in a digestible way, an understandable way, and you're doing things like setting aside taxes, tracking things, and then we'll get into investing in the future and how you can invest money to save money. These types of systems are going to work for you in the background. They're going to make things easy for you, and you're not going to have surprise tax bills at the end of the year ultimately. That's the one people can't stomach. Make sure you're getting in front of this stuff so you don't have the worries that most people end up having.